Good morning, everybody. This is Kathy with Premier Companies. I have with us today on the line Seth with Assurity. Good morning, Seth. How you doing?
Doing good, Kathy.
Wonderful. Hey, Seth, it is summertime officially. Last week was the first day of summer. A lot of our agents, they're starting to slow down a little bit because they're busy. They have vacations or different things going on. The kids are busy with different activities, and so you start seeing a slowdown and everything. But I do have agents calling in quite a bit asking, it's like, well, what's really hot during the summer? Can you help our agents with that today?
Yeah, absolutely, and that's actually what we're going to talk about. I'd like to, say hello to everybody and welcome to today's webinar, Put Out the Welcome Mat, Prospecting Tips for New Home Buyers. As Kathy mentioned, I'm Seth Groff, Manager of Life and Health Products, and during the summer months, a lot of times sales kind of slow down. But if you look at the right markets, your sales can actually heat up. And that's what we're here to talk about today. I want to share new ideas to grow your sales with actionable things that you can begin implementing today. I actually gave this webinar last week, and I already had a couple of agents write some of the policies that we talked about. So these are actionable items. You can implement them immediately, and you can go out and start making an impact on your sales. I know everyone on today's call is very busy, so we'll keep this under 30 minutes. If you have questions during today's presentation, be sure to type them into the chat feature, and we'll try to get to them. If not, the good folks at Premier will follow up with you and make sure that all your questions are answered. If you don't know who I am, this is quite the bio that marketing put together for me, but I always tell people that my job is to educate you on sales ideas that align with Assurity's portfolio of products. So hopefully you'll gain some new ideas, and that will immediately start making an impact on your sales. And if I don't do this, if I don't educate you on new sales ideas, let me know. I'm always open to feedback and getting better, so I'd love to hear what your thoughts are on today's presentation. If you're not familiar with Assurity, remember three things. The first thing you need to remember is that Assurity is financially stable. Be sure to go out and check out our 2016 annual report on assurity.com. Also, remember that we cover multiple risks. So we can be your go-to company for life insurance, disability insurance, and critical illness insurance. And then finally, remember that we have several different underwriting options available depending on how involved your client wants to be in the underwriting process. So be sure to check out our simplified issue products, our non-medical issue products, and our fully underwritten products. But enough about me and enough about Assurity. Let's take a look at what we will be talking about today. First, we'll take a look at the current housing market. We'll look at who's buying homes, when they're buying homes, and median home sales. Then we'll take a look at insurance solutions for mortgage protection that aren't the traditional term life insurance. And then finally, we'll share some ideas on how to find new prospects and reach out to these prospects. And then we'll follow up in the webinar answering any questions that you might have. So let's get started. Personally, I closed on my house in June several years ago. And as you can see, the sales of homes are the highest in June, July, and August. So why should you care? Because when a client or prospect purchases a home, it gives you a reason to reach out to them about reviewing their insurance coverage. It's an exciting time for the family, and it's a good time to talk about ways to ensure the family can stay in the home even if something were to happen to them. So why do people buy homes? Two big reasons are they get married or they have children. So you need to make sure that your conversation might be more than just having enough insurance to cover their mortgage. A question I ask is, why did you decide to buy a home? Then you can leverage this information in explaining the benefits of the solutions that you are presenting. As you can see, the median cost of all homes sold is $244,000. In my opinion, this number isn't as important as the fact that 88% of home buyers financed a portion of their purchase. The reason that this statistic is important is because if something were to happen to the income earners, for example, an unexpected death or an unexpected disability, the payment would not go away. If they want to take the steps to ensure their family can stay in the home if one of these events occur, then they should consider products that will give them the cash they need to pay their mortgage when one of those events occur. So in the industry, millennials is often a buzzword. And sometimes millennials get a bad rap because I have heard people say that millennials don't see the value in the products that we offer and that they would rather live in a downtown apartment than buy a house in a boring suburb. But when I hear statements like that, I always ask, is that true? Like, is there actual factual data to back up those claims? And what I found, according to the National Association of Realtors, is that millennials comprise 34% of all home purchases. So don't overlook this younger generation as prospects. In fact, maybe some of your baby boomer clients can introduce you to their children who might have a need for the services that you can provide. So what we're going to focus on today is two demographics. We're going to look at millennials and we're going to look at Generation X. And as you can see, this is going to cover a big portion of the home buying market. So here's what we know about millennials. You can see that the median age is 31, 66% are married, 49% live with children. They have a household median income of $82,000. The median home price is $205,000, and 98% financed a portion of their home. The other thing that I want to point out is that they are carrying student debt with them. And so a couple of differences that I noticed between the millennials and the Gen X is that the median household for Gen X is higher. Actually, it's quite a bit higher. And this might mean that they are more willing to spend a portion of their income on insurance products. And then also you can see that they're buying more expensive homes. And the good news about this is that it could result in bigger policies. But again, I want to point out at the bottom of that slide is that even the Gen X is still carrying student loan with them. So again, you need to bring that up and incorporate that in the conversation because it's going to increase the amount of insurance they purchase, which is a good thing because it's covering all of their needs, not just focusing on one. So here's what we're going to talk about today, different insurance solutions. And you know, the reason I'm here is to talk about the different strategies available to ensure a family can stay in their home in the event of an accidental death or a disability. And there's several different products available to accomplish this. My goal today is to look at a couple of different solutions that are often overlooked in this marketplace to give you maybe a new idea to go out and talk to maybe some clients that you've had conversations with in the past, but for whatever reasons, they passed on what you had to offer. So the first option that I want to make you aware of is PMI. And if you go out and Google the term mortgage protection, you're going to find websites talking about PMI, and that stands for private mortgage insurance. This is not the type of insurance we are talking about today. However, you need to be aware of what it is because your clients will bring it up or they might bring it up, and you need to be able to have a conversation about it. PMI is a type of insurance that benefits the lenders rather than the homeowners, and it's required for home loans that don't have at least a 20% down payment. The homeowners buy and pay for it, but it doesn't cover them. So in a nutshell, it protects the lender if the loan goes into default. And again, you just need to be aware of what this type of insurance is because it could come up in the conversation. Also, term insurance is also seen as a traditional product to protect someone's mortgage. And it makes sense. You can sell a 15 or 30-year term, which are common mortgage lengths. Assurity has a great term product for this, and we have several agents that focus on this market. You might even have seen me or somebody else at Assurity give a webinar on utilizing our term insurance as mortgage protection with the disability income rider or a critical illness rider. And this is still a great solution, but today we're going to look at a couple of different options. So first, what we're going to look at is a product that has an accidental death and accidental disability benefit at a lower cost than term insurance called AxiFlex. Then we'll take a look at Simplified DI. Both products feature fast underwriting, and don't require medical exams. So they make them attractive options for both you and your prospects. So on this slide, I want to make one thing very clear. AxiFlex pays a benefit if the client dies due to an accident. It is important to explain the differences between AxiFlex and other life insurance alternatives. I recommend showing them a term solution and even perhaps a permanent solution. But I like to come back with AxiFlex if the client thinks that the other solutions are too expensive, or if they have what I call Superman syndrome and don't think they'll die, or if they can't qualify for the traditional life insurance due to a health condition. I just want to reemphasize that you need to make sure that the client is aware that this policy is accident only. But AxiFlex can be an affordable mortgage protection product for millennials who are purchasing their first home and may be looking for mortgage protection solution beyond the traditional term life insurance. Actually, unintentional injuries or accidents are the leading cause of death for adults aged 25 through 44. And so that makes AxiFlex an attractive product for this demographic. Because remember that many are facing high student loan and consumer debt, and they may not be willing or they may not have the monthly income to pay for traditional life insurance. So remember that AxiFlex offers protection of up to $350,000 in the event of an accidental death. Then you can also tack on the accident-only DI rider or disability rider, disability income rider, and this can provide monthly benefits of up to $1,800 in the event of a total disability caused by an accident. Then also consider the return of premium rider, which is going to return the paid premiums back to the client if their policy is still in force at age 75, or even if the policy terminates early. Just be sure to go out and look at that return of premium schedule. So it's a great product. So let's take a look at a case study. We have a 29-year-old married real estate agent. Her name is Annie, and she's earning about $55,000 a year. She and her husband just purchased a new home for $195,000, but due to Annie's commission-based income and her other monthly payments, which include an auto loan and credit card debt and also a student loan, she doesn't want to pay or can't afford traditional term insurance. So for less than $25 per month, Annie can cover her mortgage and up to $1,800 of her monthly income in the event of an accidental death or an accidental disability. And so AxiFlex, we get her almost immediate protection because remember that the underwriting process is non-medical and includes a simple application. Actually, it only includes one health question, whether or not they've been diagnosed with HIV or AIDS. So it's a very quick process. Policies are issued within 2 business days, provided that your client meets all the qualifications. And the big thing is remember that the benefits are paid directly to the client. So they get to decide how they use the money. But once the client is accepted, their premiums can't be raised, and they're going to be guaranteed up to that age of 75 as long as they continue their monthly payments. So again, consider this type of coverage with young families that want an affordable option, just like Annie, that wants to protect her mortgage but doesn't want to pay for traditional life insurance. Just remember that this is accidental death and accidental disability income. And you just need to make sure this is very clear with the clients and educate them on the other options available. So next, let's take a look at a sales idea for what I call repeat home buyers. And the reason DI might work in this market is that this demographic, if they're buying their second home, is that they're probably farther along in their career. So they might have more discretionary income that they're willing to spend on insurance products. Also, they might already have life insurance in place and don't feel like they need to talk to you about life insurance. So here's a concept that you can go into that can protect against a risk that they might haven't thought about. So it's something new that you can go in, and if maybe you've already sold someone life insurance to protect their mortgage, here's a concept that you can go back to them with to protect against another risk, which is the disability. So we all know that a total disability can drain someone's emergency and retirement savings. And simplified DI is a great option for home buyers who may want to protect their mortgage, and they can we want to protect against that disability. And so we can write up to $3,000 a month to cover their monthly mortgage expenses. We can write this in benefit periods that include 6 months, 1 year, or 2 years. So that would result in, having enough money to pay that mortgage for that length of time. For the client, it's an easy process. It's a simplified application and a simplified underwriting process. So this means that there's no medical test required. It's going to be guaranteed renewable up to age 67. Also consider looking at the critical illness rider, which would provide a lump sum payment at the diagnosis of a heart attack, stroke, or cancer. There's also a retroactive injury benefit rider, which would pay benefits retroactively from day one when the disability is a result of an injury. And then again, look at the return of premium rider, which is going to pay 100% of the premiums back to your clients when the policy expires at age 67. So this is an excellent option for producers or clients who have little or no DI and want to get some income protection. Remember that this actually qualifies for a 4-day underwriting process, and it includes that brief application, and no financial information or medical test is required other than on the application. I'm saying no financial documentation is required. Also consider using the e-app for not only the simplified DI, but for the AxioFlex as well, and then it's just going to speed up the process even more. So let's look at the case study we have prepared for today. You can see that we have simplified DI with return of premium, and this would be a great solution for this individual that's purchasing his second home. This individual is a 32-year-old freelance web developer. He and his wife recently had a second child and purchased a larger home for $300,000. The good news is they were able to put down a $45,000 down payment. However, even though they have 2 incomes, he and his wife still have student loan debt, and they have an auto loan. So he can get simplified DI coverage in a fast, non-medical underwriting process that will cover their approximately $1,550 monthly mortgage if he becomes disabled. And that's going to be able to pay that for up to 2 years because we set it up to have a 2-year benefit period. And if he never uses his coverage, he can get 100% of his premiums back because we added that return of premium rider. So writing simplified DI for mortgage protection is a new way to think about this long established and trusted product. Because remember, no medical exams, it's going to be that fast underwriting process, and it's going to be a convenient choice for clients like this who are upgrading their homes and want affordable coverage to complement their existing insurance that they already have in place. So now we've looked at the different solutions that you can provide. Let's take a look at how to reach out to new home buyers, because that's the ultimate question. You're probably saying, well, Seth, these are great ideas, but how do I get in front of more people during the summer months, and how do I find these people that are purchasing homes and might be willing to discuss the solutions that you can offer them now? Well, the first place to look is to develop a relationship with a real estate agent. If you don't have a relationship with a real estate agent, get one, because the real estate agents are working directly with home buyers, and it could be a good referral lead for the homeowners once the sale is closed. Obviously, referrals go both ways, so you might have to refer some people to them before they'll refer people to you, but you need to start working on that relationship immediately. Also, consider looking on social media. The first place you can look is just on your Facebook with your friends or the people you're connected with Facebook. Typically, when somebody buys a new home, they're going to post a picture of it on Facebook. So that's what I consider an unpaid lead. They're telling you that you're that they bought a new home. So that's a good place to look. Also, ask people if they know anybody that's buying homes. So don't overlook Facebook, because that ultimately is where people say, look, I bought a home, and they're giving that information free, and you can grab it and take advantage of it. You also can do some paid ads. I don't have any experience doing that, but I do know people that do some marketing through Facebook, and it seems to work for them, but I don't have any experience doing it. Also, don't forget to look at public records, because all property purchases or deed transfers is public information. And so you can do it the old-fashioned way, going out to the courthouse, or thumbing through local newspapers. But what I found is that you can also set up a Google alert, and it's relatively simple. I set one up for Nebraska, and periodically, when there's online publications that list the transfer of property, it's just a good way. The information actually comes to you. It does take a little bit of tweaking depending on where you're from. I'm in Nebraska, so I just did set up an alert for property transfers in Nebraska, and so I get a wide range. And Nebraska is a big state. It's takes quite a while, so you might need to narrow in your search criteria, but it's relatively easy, and I can give that information to Kathy so that she can educate you on how to set those up. And then finally, consider prospecting your current clients. Talking about life insurance to cover someone's mortgage is not a new concept. You probably have people in your book of business that you've done that with. Go back to those people and ask them about the DI. Talk to them about the disability income, the simplified DI. Or your older clients, ask if they have kids, ask if they're buying houses. Maybe they can refer you to their kids. So, I know people get sick and tired of saying that, about prospecting their current book, but yeah, it takes a little bit of work, but it works. So go out and do that. So hopefully that'll give you some ideas of the best ways to find new prospects. I wish I had a silver bullet for you guys, but if you do a little work and use these, you'll actually have some success. So what I always say on this slide is take out a piece of paper, list, write down some real estate agents you can reach out to, see if you can develop a relationship. Also make a list of people that you know that's purchased a house recently. Then also make a list of people that can be referral sources, and write those down, and then start making the calls today to take advantage of the information that we talked about. So with that, Kathy, I'll turn it back over to you. That's what I had prepared for today's presentation. I said I'd keep it short and sweet. If there's any questions that you think are applicable to the entire audience, I can go ahead and answer them at this point in time.
Hey, thanks, Seth. At this moment, I don't have any questions, but if anybody has any questions, go ahead and put it out there real quick so we can answer them for you. I do want to say I have seen this before, like home shows. They usually happen in the spring, that I've actually seen a couple insurance agents go to home shows. So,
Okay.
they're talking, everything is built around, new things going on at their home. Either they're buying new, fixing it up, or doing something. But that's another avenue if someone's interested in doing something like that. Check your home shows in the area. You were talking about the accidental death benefit rider and the DI rider, something that's, and I don't know why, maybe it's because of, I've been doing this for 15 years, but working with life insurance, but I look at the obituaries quite a bit, and you can actually tell how many people out of those have, like, because of a car accident or because they, something happened to them. It wasn't, cancer or tragic or old age. It was something else that caused the death. So, check your obits, kind of get an idea in your area what's going on, and especially during the summer months. I hate to say it, very, very busy things happen to people. Car accidents are, a big thing too, that can relate to why they can't work or something like that around there. So give you some extra ideas on that. But yeah, if you have any questions, I'm not seeing anything pop up here, so you did a really good job of that. But if you have any questions, think of anything, want some contracting for a surety to get started there, feel free to give us a call at 1-800-365-8208. Ask your life marketer. I did have a question pop in. Will they have the option to add to their mortgage payment? Oh, wait a minute, I can't see. This is very tiny, so I apologize. I'm trying to spread this out so I can read this better, and I didn't show up all the way. Well, they have the option to add to the life mortgage payment like, this is Sharon Jenkins. If you're out there, Sharon, I'm going to unlock you for a second to see if you can, Sharon, go ahead and answer your question. Sharon, are you there?
Yeah, can you hear me?
Yeah, I unmuted you. Yep, we can hear you fine. Go ahead and ask your question.
Yeah, I wondered if that was a way to add it into their mortgage payment like they do their regular mortgage insurance.
No, this will traditionally be outside of their mortgage payment, unless obviously you have something hooked, some sort of relationship with the bank. But what I would recommend, so it'll be an automatic bank, it'll be an automatic bank withdrawal from their bank account. So it won't be attached to their mortgage. But if that's something that you're interested in, what I would recommend doing is just setting up the withdrawal date for the life insurance or the AxiFlex or the DI, or even if you did term insurance, whatever you sold them, just set it up so that the day it comes out of their checking account is the same day that it comes out of their checking account to pay their mortgage. That way they're reminded why they bought it. If you get it too far spread apart, they'll forget. So what I always just tell people is whatever day they pay their mortgage, set it up so that their insurance is paid that day as well.
Okay, but just curious, why can't you set it up like that? Do you have to have a special relationship with that bank or the?
Yeah, I mean, it gets weird with who's paying for it too. It's just my recommendation is to not tie it to that and just pay it individually and just set it up. Because then otherwise you run into issues who's actually paying for it. Then the bank's paying, and it just works better and is cleaner if you just keep it out of it.
Okay. All right. Thank you.
Yep.
All right. Thank you, Sharon. I'm going to block you again, and then I've got a question coming in from Lisa Miller. Lisa, if you're out there, I'm going to unmute you. Lisa, are you there?
Yes.
Lisa? Hi. Go ahead and ask your question.
Yes. Hi, I was just wondering if these two products are relevant to New York State and if the return of premium rider was available here as well.
So AxiFlex is approved in New York. So the AxiFlex is, and the only two riders, the accident-only disability rider is approved, but the return of premium is not in New York. And then the simplified DI product is not approved in New York, but we do have our Century Plus DI product approved in New York, and it's our fully underwritten version. But ultimately, it would be the same concept. It's just that it's not the simplified product. It's our fully underwritten. And it looks like the ROP is not approved in New York for our fully underwritten either. But you do have an option to go out and talk to them about AxiFlex and disability. It's just be aware that the disability is Century Plus.
Right, and for those that already have DI insurance, do we have to be conscious of how much of their income is already protected when we're working on the benefits amounts?
Yep. Yes, you do. For both products, it's going to ask whether or not they have disability coverage in force. And so if they're already maxed out with their DI coverage, the rule of thumb is about 60% of their income. If they're already maxed out on DI, they're probably not going to be able to get any additional coverage. So you do need to ask if they have DI coverage in force.
Okay.
Did that help you, Lisa?
Yes, thank you.
All right, thank you. All right, so I have Monica Bailey. I'm going to unmute you. Monica, you had your hand up for a question. I'm going to try and unmute you here for a second. It's not unmuting you. Hold a second. I don't know why it's not unmuting you. I apologize. Okay, Monica, are you still there? Did you have a question? I felt like I got you unmuted. You had your hand up. Monica, are you still there? Okay, I'll mute her back up. And I see we have a couple other questions coming in. Sharon's asking again, what is the commissions on these? And Sharon, we'll go ahead and get you that information out to you so you have that information. And then I have Sylvester out here is asking a question too. Okay. Sylvester, are you there?
Yes, I'm here. Good morning. Hi.
Good morning. How are you doing? Okay. Go ahead and ask your question.
Okay, I think he may have covered this already. The simplified DI, does that only cover the accident-related DI, or does it also cover sickness?
Yep, that's a good question. And the simplified DI, so that was the last product that we talked about. Simplified DI covers both accident and sickness. Okay, so the simplified DI covers both. The AxiFlex with the DI rider, the concept we talked about first, that
Right.
covers only accidental DI, as the name would imply. But the simplified is going to cover both accidents or sickness.
Now, last question. At the time of claim, do they need to provide proof of income?
No. At time of claim, they do not need to provide proof of income. They're going to look at what their income is when it's issued. So if their income, decreases for whatever reason, they still get their original amount that they qualified for. We don't adjust it at the time of underwriting.
But that income is whatever they put on the application. They don't need to provide any documentation?
Yep. This product does not require income documentation. But we're going to ask on the application what their income is, and we're trusting that the agent and the client answers that truthfully.
Right. Thank you.
Yep.
Okay. All right. Thanks, Sylvester. I'm going to the next person is Joe Wiggins. Give me a second, Joe, and I'll have you unblocked. All right, Joe, are you there? Joe, are you still there? Okay, that's not working. So I do have another question that came in. AxiFlex with DI only pays out in total disability situations.
Yes.
Is that correct? Okay.
Yep.
All right. And then another agent asked, and they're just asking to see if we get a replay of this webinar. If anyone would like a replay of the webinar, let us know. We'll go ahead and get you a copy of this. This is being recorded, so we can go ahead and send that out to you if you're interested on it. Sometimes we do it automatically just so you have a copy of it so you can go back through and get the information you're looking for on this. And I think we answered all the questions. So if anyone has any additional questions, would like to see some illustrations ran, or like to get a surety contracting with us, please feel free to give us a call again at 1-800-365-8208. Just ask for your life marketer, and we're here to help you. Thanks a lot, Seth. I appreciate your time. As always, you did a great job. And thanks, everybody, for joining us on a Monday. And have a great day. Take care.
All right. Thanks.